Hello, everyone. Before I begin, speaking, I'd like to, apologize for my voice. Right, I'm kind of feeling under the weather a bit. I believe it's the sudden climate change that I've had. But yes, that's all pertaining to that. So yes, everyone. This week you can see that we had little to no high probability price action. Right, little to no high probability price action. Of course, all, if not most of all the moves that took place this week was a effect of sequential SMT, right? And as you guys know, sequential SMT occurs between either the doubling of price, and when I say doubling of price, I mean between January, February, and so on, right? And between the quarters of the cycles that you're looking at, right? So yes, so Monday, no news. Tuesday, no news. Wednesday, no news. And Thursday, we did say that we could expect Thursday to form the low of the week for some assets. And if not Thursday, what would it be? It would be Wednesday, right? And so if you have sequential SMT between Wednesday and Thursday, then you would expect what to happen? Friday to, continue in the direction, whereas, price is supposed to go based off of the sequential SMT. So here, and I hope that you guys are hearing me clearly this time. So yes, now we're looking at the US dollar index. Right, this is the US dollar index. As you guys can see, price has been, going in our anticipated direction. And it's pretty obvious where we have the next strong liquidity, as we've mentioned before, these highs, this high, and this high, right? And this one as well, right? That's the utmost strong liquidity for the US dollar index. Right, at the moment, you'll see that we have the futures markets, specifically talking about the NASDAQ, the S&P 500, and the Dow, right? They're basically doing the opposite of what the dollar index is doing at the moment, right? And things like this, these type of price action, right? This is normal during this time, right? At this time, it may seem that you may not be able to find your footing in the marketplace. It may seem like it's just difficult to navigate price action, and it should be, right? If you check, the last elections, always the month before you have the US election, which usually occur around the 5th of November, the month before, for the entire month, price is always low probability. If it expands, like how we have this expansion here, there is no pullbacks, right? It just expands and you don't get a, way to enter. Whereas here, you can see that when price was expanding, the downside dropping, price returned to this fair value gap, then it dropped, it returned to this fair value gap again, and it dropped. Right, even here you can see price return, filled this fair value gap, dropped. Here again, price went above this high, dropped, and here before price did this, which we did see beforehand as well. Price dropped within this fair value gap, right, within this balanced price range, and rallied higher. Here, same thing happened. Price dropped, took this low out, dropped within this gap. But as we get closer to the US elections, you can see the type of price action that we begun to have, right? So it's very evident in price action. And whenever the US dollar index is showing low probability price action, which is, predictable, right? As, I have been talking about this for, like 2 months now, talking about this exact time. When I say this exact time, I mean, the last 4 weeks, of course, going to be the last 4 weeks before you have the US elections, right? So it will always be like this. So the next time, there's elections again, you'll know what to look for. You'll know what to expect, right? It's very clear. You look at a chart, you'll see all of this price action since the year start. It was not, bad. This was not bad. This was not bad at all. All of this was high probability right here, right? Which we all talked about. But once we become getting closer, then we saw here, price drop within this fair value gap, trade here, failed to break above this side, fell. Then we had some high probability price action occur here. But then once we got here, you see what happens. And here, my friends, is, as I highlighted before, I just haven't shown you guys the monthly chart, right? So this is the direction that we are looking to see, price go in. And it's just based off of this pattern right here, sequential SMT, right? As you guys already know, right? So here, failure swing. So what does that mean? We expect price to gravitate to this high based off of the concept that we use, right? Before the formation of 95% of this candle, right? We anticipated price to move upwards. And as you guys can see, this is a monthly time frame. So this is a lot of movement, right? Looking at the euro, you guys can see that we fell aggressively, right? And still, I believe that we still have some, a further way to go. For the British pound, due to the fact that the British pound took this high, right, which is where this move originated from, due to the fact that British pound took this high and these did not, take their respective liquidity pools. This is why, right, we have price not falling as much as these, right? So yes, in the future we could get, another sequential SMT just based off of this, right? If you see, euro take a low and, the dollar index, is prone to take this high, as long as this fails to take a low, then a low which would allow us to consider this as sequential, then as long as there's SMT, we could expect a reversal again, right? So yes, you guys can see that during this year, right? Well, during the last 2 years, we have been consolidating, right? We've just been in consolidation. And whenever you see something like this happens, right? And it goes the other way as well. Once you see price expanding, there's clean price action, right? Here we have clean price action. Here we have clean price action as well, right? Then now what do we have? Choppy price action, right? Once you see this happen, right, then you know that the upcoming years after this, US election, we will have a lot of movement, right? So definitely for the last 2 years, right? Well, 1.5 years to be exact. You can see what you've been trading. Does this look like high probability? No, it doesn't. We have just been range bound, right? So any one of you guys that survived this, right? Brace yourself for the opportunities that will come. All right, it's about to get easy because it has been hard, and you have been learning while it has been hard, right? To see expansion out of consolidation, you already know what to look for. This right here again, sequential SMT, which is right there, and it's just as simple as that. Also, I've said before that the higher the time frame cycle that you find the sequential SMT, or the higher the cycle that it occurs, the higher the probability of price following that sequence. So yes, here you can see we have the E-mini, S&P 500, the NASDAQ, and the Dow, right? So here we have the S&P 500 trading in this fair value gap. There's no fair value gap here. That's a crack correlation already, right? Here we have price, getting closer to the open of the week, right? And yes, it's Thursday. So we can expect price to run about this high. This is Wednesday. No, this is Wednesday. Not Wednesday, my bad. This is the weekly time frame. The W here confused me for a second. I don't know why. Right, so this is the weekly time frame. So here it looks like, nothing, which in my opinion, it is nothing, right? When we talk about high probability weeks, where we talk about volatility, we like to see price action like this. Right, here we had this precision swing point, price fell, we had another precision swing point here, price dropped within and then just continued higher, right? But now you guys can see, and it's evident even here, and this is also consolidation, right? This is vertical consolidation, right? Only this type of price action would not be considered as consolidation, right? But this is, right, where we have price moving, in the same direction, just the same direction within the same range. But here we have it, occurring diagonally. So yes, this high would be a drawn liquidity, and this high would be a drawn liquidity, right? And these are the main assets that we use, or the main assets that we trade, right? The Dow is just, basically just a tool, to help us to gauge reversals. Here, again, we have the index futures chart, right? So here you can see that we had sequential SMT, which occurred today. So by default, we expect higher prices, right? For the Dow, we expect higher prices. Here, the Dow will more than likely not break. If it doesn't break above this high and this does, then that would be sequential SMT, and we will see price coming lower. Or if it breaks it, or if it breaks this high, and for some reason one of these lag, which I highly doubt would happen, I believe that this would be the one not to break the high, if one decides not to do so, right? So yes, the drawn liquidity here, you can see these lines right here for the mini Nasdaq. It's this high. We'll see these highs first. This high here. Also here we have this precision swing point right here, right? And you already know how we approach our precision swing points, right? The main ones to consider would be the Nasdaq and the S&P 500. There are times when price could trade almost to the low of the precision swing point, pertaining to the Dow, or even trade below it sometimes. Then rally. Whereas times these will hold firm. Right, so drawn liquidity for the S&P 500 here is here. It's very obvious right here, in my opinion. Right, but at the same time, nothing is is sure. We're just using the concepts that we understand. We're just using the concepts that we always use. We're just following the rules, and whatever happens, happens. Right, but yes, this is high probability in my opinion. These highs right here. Right, we don't have any news tomorrow, but as we know, Friday usually returns back within the weekly range, right? And tomorrow is Friday, so we could look for that to happen, or we would have to wait until next week if that just decides not to happen for some reason. We don't have any news, so it's a possibility. So yes, sequential SMT, expect higher prices, precision swing point, drawn liquidity here, first day profit here. And here we have the 15-minute time frame for the S&P 500 and the Nasdaq, right? So again, right, you guys can see this is not the clearest price action, right, that there will ever be, or that there has ever been, right? Anyways, here we have this new week opening gap. If you see, right, if you're a person that you're afraid of, trading without extra confirmation, right? If price breaks above here, right, and if it forms a gap right here, so it could do whatever it wants to do here, right, within this area of price action. But once it breaks above here, and you have sequential SMT or a precision swing point or a precision candle, right? Because the higher time frame premise is already pointing higher, right? And the fact that price failed to break to trade within this gap, and here we have price trading into this wick, which is the highest wick, and you know that wicks are gaps, right? Also, price is in close proximity to this high, and there was no sequential SMT or internal sequential SMT that would indicate that price would go lower. We can expect this high to be ran through. So if we see price, for example, is it? If we see this occur, if your value gap just occur here, right? And then price falls within that fair value gap while being overlapped with this cubic opening gap, that would be an entry point to go higher. So this is pretty straightforward, and you would like to see this happen and, respect your rules, which the main rule would be make sure that you buy below a true open, or make sure that, price has ran below the true open already, right? And it's just continuing higher, right? So here, this would be what? This would be the Asian session, right? So you could watch the Asian session, and if you see sequential SMT between, the assets, then you will know that the low of the day is already in. I hope that you found this insightful, and we will be back next week, Monday at 6 p.m. Eastern Standard Time. If not Monday, it will be Sunday. It depends on the news. They can change them over the weekend. So I will let you guys know. Right. Hope that you found this insightful. Please, study this and watch to see what price gives us. Have a wonderful night.